right, thank you everyone, and welcome to today's edition of the Insider Series. I'm really delighted to welcome our guest, Ted Stone from TechCXO, and we'll be introducing Ted and having a terrific conversation about fractional CFOs and fractional executives today. But before we get started, wanted to just remind everyone a little bit about Valenta and the Insider Series, who we are and what the series is. So just as a reminder, Valenta's mission is to help companies be more efficient in the way that they operate. And we do that through 4 core service offerings: consulting, including process consulting and process optimization, digital transformation and automation, staff augmentation and outsourcing through our operational centers around the world, and learning and training services that can help any business assist their team in their development as well. And as everyone knows, our Insider Series has been a very popular series over the last year, where we've profiled successful companies and executives around the services they provide their clients and what they do in an effort to really help our clients and our community at Valenta to really see opportunities to grow and develop and build their business as well. And so the webinar today will be live, but we will be also issuing this out as a podcast on both Apple and Spotify in the coming days ahead. And if you haven't already subscribed to the Valenta Insider Series podcast, I would encourage everyone to do so. There is a library of excellent podcasts over the last year covering a variety of topics, and would encourage everyone to participate where possible. So today, as I mentioned, we are absolutely delighted to welcome Ted Stone. And Ted is the managing partner for the New York practice of TechCXO. And in that role, he provides CFO services on a fractional basis to companies in the New York areas that don't quite yet have the scale to afford or require a strategic CFO. But in addition, Ted also leads TechCXO's growing practice of other C-level consultants in the area, providing CFO, sales, marketing, technology, or operating officers as well. And Ted joined TechCXO in November of 2016 after a 36-year career as a top financial officer and business partners across 12 different businesses, across a range of global B2B technology-intensive industries, and varying from startups all the way up to established companies up to $2.5 billion in revenue. His careers also include serving as CFO for 3 public companies, 4 private equity-backed firms, 2 angel-backed technology startups, and 4 large subsidiaries of Fortune 500 companies. Ted, it is absolutely a pleasure to welcome you to the Insider podcast and webinar. Thank you so much for joining us today.
I am delighted to be here. Thanks very much for having me.
Thanks. Well, Ted, let's start. We just went through a super impressive biography, so let's kind of dig into that a little bit. I'd love for you to just tell us a little bit more about your background prior to becoming a fractional executive, and then what led you to become one.
Love to talk about myself, like most people, I guess. I tell my clients when I'm working with a client and introducing myself to capital sources, whatever, I love to tell people I'm a recovering engineer. The most important thing that I learned as an undergraduate engineer at Dartmouth College is I wanted to go to graduate school in business, which I did at the Tuck School at Dartmouth, which is literally right across the street from the engineering school. After Tuck, I joined Pfizer Pharmaceuticals for 8 years, and after 4, got my first of those top financial officer jobs as a division controller for the 2nd largest and fastest growing division of Pfizer at the time. But step back for a minute and just talk about, Kishore talked about technology-driven businesses. My definition of a technology-driven business is perhaps different than others. It's companies with lots of engineers running around working really hard to either invent what we're going to be selling at some point in the future, or helping our current clients use our technology intensive product or service to deliver value to their customers, or both in many cases. I've built a career basically being the business guy who can talk to the engineers and the engineer who can talk to the business guy. And that turns out to be a very useful skill in a business that has lots of engineers who are the drivers of the value that the customer is delivering, that the company is delivering to its customers. Now, it's used my engineering background without requiring me to actually do engineering, for which all of us are grateful. And it's been incredibly rewarding. Now, Kishore listed off, a bunch of different companies, the Pfizer division controller, CFO for Searle Pharmaceuticals owned by Monsanto, VP finance for a $2.5 billion group at Thomson Reuters, CFO for a $500 million group at Xerox, 3 public companies, all small to mid-cap businesses. The biggest one was called Velocity Express, does the last mile delivery work that FedEx and UPS won't do. And you say, wait a minute, technology driven? The company didn't own a truck, didn't employ a driver. It was a technology company managing big databases and route optimization software to make sure that you got your package delivered where you wanted it, when you wanted it, at the time that you wanted it, and that we did so at a profit. 4 private equity-backed businesses and some angel-backed startups. But all that same fundamental skill set, the engineer who can talk to the business guy who can talk to the engineers, how do we put those together into a profitable business model that customers value the service we provide and we make money providing it? So I love doing that, and I found a way to keep doing it.
That's terrific. So, I guess the term fractional executive is one that we're hearing more and more. But I think for just everyone's benefit to level set, could you talk a little bit about how do you define a fractional executive and what they do?
Yeah, delighted to. And I'm going to use finance as a metaphor for all fractional executives because I'm a CFO and I know what that's about. But it's a metaphor. So everything I'm about to say about finance, you can say about marketing, product, human capital, etc. And the basic premise is every company needs a strategic CFO, but not every company is big enough yet to where it makes sense for them to pay that person 5 days a week. Now there's a lot in that sentence, and let's unpack it. First, our definition of a strategic CFO is somebody who helps the leadership team craft a realistic, financially achievable vision for what are we trying to get done in this business, and then creates the internal management operating system so that everybody in the business can do their jobs better because they've got the right information at the right time in a format that works for them, with some analytical support to help them torture the numbers, tease them apart, understand what has happened to allow them to make better decisions for what is going to happen. In other words, help them execute their piece of that plan, whatever that plan is. Sales, marketing, operations, product development, product management, all of the people who do those things are better at their jobs when they've got the right information to help them do their jobs. And it's the CFO's job to make sure that happens. If I were a CMO, I'd talk about a different list of specific things that need to be done at a strategic level. If I were an operations executive, again, a different list, but the concept of somebody who has been at a $2 million scale. And so I know I've walked a mile in your shoes. I know what it is to be a leader in a small business, but I've also been the same role in a $20 million business. So I can help you get from 2 million to 20. Yeah. And if my client's at 20 million and they want to get to 200 million, I've done both of those. Mm-hmm. Which leads me to the other thing to unpack in there. We think of ourselves as training wheels mm-hmm. to help our clients grow as quickly and reliably as they can so that they get to the next level where it does make sense for them to hire a full-time strategic CFO, COO, CTO, et cetera, et cetera. And like training wheels, when you know how to ride the bike, take the
Right.
training wheels off. We will go away and find another really cool growth stage company to help. And we'll usually help you hire and onboard, our full-time successor. Now, but that's really up to you as a client as to how long you keep us involved. So that's the premise. I mean, I don't think 3 guys in a garage need a fractional executive, but when you've got that first minimally viable product out there in the market and customers said, oh my God, this is great, wow. And they came back to you and they said, I want more. You go, okay, now we've got a business here. Around that time, you need to start having grownups, the expertise of grownups available to you on some basis. And fractional is a great way to do it. Pay me 1 day a week is a lot less than paying somebody else 5 days a week. And you can get an awful lot of leverage out of it. Not just the work that I do, but by being able to work with your in-house team, whoever they are. Maybe it's just an outsourced accounting firm. Well, let's get that outsourced accounting firm to produce reports that give you the right information at the right time in a format that's useful. That needs some higher level guidance than your typical outsourced accountant could do. Or most in-house staffs in small stage companies.
So Ted, and we'll talk more as we go through our conversation today about the benefits to a company. You just went through several of them right just now. But turning it on its head, why was this appealing to you? Because I kind of look at your background and say, you could have done anything you wanted, really. And so why the fractional executive route?
You heard a minute ago what my greatest personal satisfaction is, and I'll put it in a different context now. It is enormously satisfying for me to see what happens when you give a bunch of bright, hardworking, often frustrated people the right information at the right time in a format, et cetera, et cetera. In my experience, every time I've gone into an organization and been part of that process on the leadership team of putting the right information, et cetera, the people are just as bright and just as hardworking, but they become way less frustrated because they're all making better decisions because they all have the right information at the right time with the analytical support to help them make better decisions the next time. And just the feeling of watching people come moping into the office when you join the organization because, golly, this is frustrating, but I'm dedicated, I'm going to work. Yep. And 3, 6, 9 months later, just as bright, just as hardworking, coming into the office with a bounce in their step because, man, did you see that thing that came out last night? This new customer that we just won? And knowing that I helped. Yep. I didn't do it. I mean, you've heard me say this a couple of times. I think, in my opinion, the CFO's job is to help everyone else in the company do their jobs better. Now that's finance. I mean, you can talk about marketing people. Part of my job is to help everyone in the organization understand and live the company's brand. A brand is not just the way we advertise. A brand is who we are. That's what gets me out of bed in the morning, is knowing that I'm making a difference in people's lives. And hey, in a fractional consulting model, I get to have that good feeling with 2, 3, or 4 clients at the same time, not just one. So, how cool is that?
No, the variety is definitely there. And when you think about, you talked a little bit about the timing, right, of when a business owner might bring on a fractional executive, and your point's well taken. It's not the 3 guys in the garage, but it's really when they're starting to get to certain thresholds. What else should a business owner be considering when they're thinking about, is a fractional executive right for me?
Yeah. This industry has been around for 30 or 40 years in Silicon Valley. I mean, it's one of the reasons why Silicon Valley is as successful as it is that in that ecosystem, you don't have to go out and hire full-time C-suite executives. There are hundreds, if not thousands, of people walking around like me who provide the services, and this is what you're going to do. There are, what we've observed, TechCXO has been around for 19 years now. We see two typical use cases, and there are a couple of variations on each of those use case themes. The first general use case is, man, we are growing really fast, and the CEO and the board, either number one is what you hope happens, they see it coming and they try to get out ahead of that growth by installing a more disciplined, sophisticated management operating system. So they don't become the second use case, which is, oh crap, this is getting complicated. I don't know. We're not giving people the information they need to make good data-driven decisions. Right. We might have management reports, but our people don't trust them, or the reports are too late, or they're not useful, or they're not relevant. We know we need to be looking down the road, but we're not doing a very good job. We're either not doing it or we're not doing a good job of planning, budgeting, forecasting. So we don't know, we don't have visibility to our burn rate, to our future capital needs, when we need it, how much we need. Now, we got the initial rocket ship, and then, geez, profits have changed trends. I wonder what that's about. Or even scarier sometimes is, wow, revenue's still going up to the right and profits look pretty good, but boy, there's not much money in the bank. What's that about? Or you'll see a company where strategic planning is really more like strategy du jour. Yeah. And it doesn't have a level of discipline that it needs so that people can actually identify the company's North Star and head that way.
Right.
Or we get people who just, they don't know how well or how badly they're doing, because we're not measuring the operational and financial performance of the business in a useful way. And if you're not measuring it, then you're not managing it effectively. Those things can cold cock you if you're not anticipating them. The 3 guys in the garage when the minimally viable product comes along, and then it turns into 13 people in the garage in the house next door. That's often the first time when you realize, wait a minute, this is getting more complicated than just reaching across the desk to my partner and saying, now what? So anyway, that's the first use case, is building management operating systems to support growth. You can either get out ahead of it, or you can react when it begins whacking you right side the head to start fixing it after the fact. They both work. Obviously we all like to plan ahead, but not everybody can do that, or sometimes growth is just way faster than you could have expected. The other use case is getting ready for some form of a capital market transaction. You're going to either sell the business, merge with another one, this is your liquidity event, or you're getting ready to go out and raise an A round, a B round, from savvy investors. Now, most early stage companies have, some group of friends, family, FFF, friends, family, and fools, the early round of funding. But when you get into serious institutional investors who have fiduciary responsibilities to limited to other people's money, to invest on their behalf, that's a different animal, and what they expect in the companies in which they invest is just different than what you as a business owner might think you need. And that's a whole new world where, of TechCXO's finance engagements, this is a educated guess, but a guess, 2/3 of them come from, we're getting ready to do something in the capital markets, either sell the business or raise some capital so we can grow our business faster. And in the sales and marketing side, we've outgrown the charisma of the founder, and now we need to segment our market, identify suspects, prospects, qualified prospects, run a sales pipeline. We have so many, or in a product management, product development side, there are 28 different things we could do with our core technology. How do we pick the 3 that we're going to run sprints on this quarter to bring these products closer and closer to market? Or on the operations side, founders often have a pretty good strategic vision of where they want to go, but maybe they're not so good at keeping the trains running on time. Right. Or maybe they just need a thought partner. it is lonely at the top, and our executive ops partners are all experienced entrepreneurs, having grown a few businesses of their own before. So it's just somebody to bounce ideas off of, and or increase your own capacity. Bounce the ideas off, and you've got so many great ideas, you need sort of a deputy CEO,
Right.
To help you execute. So lots of different use cases, if you will, and hopefully that's a sufficiently fulsome summary.
No, absolutely. So we've kind of talked about some of the roles that are pretty common fractional executives, CFOs, sales officers, marketing officers, CTOs, COOs, et cetera. Are there other fractional executive roles that you've seen, maybe less often, but do exist?
For sure. You will see larger companies. In fact, I talked about it when we were talking about that, your last question. You'll see larger companies use a fractional executive as a kind of a deputy CEO, CFO, et cetera, to help the full-time CFO just manage a pile of work that's too big for one human being. I'm doing that right now with a terrific full-time CFO who's just got too much on his plate. His company is going through sort of multiple transformations at the same time, and each of the businesses in it is going through some pretty substantial growth. The ownership group in this case had worked with me on 2 previous engagements. And after Bob joined and said, "Oh my God, this is just," and they all said, "Yeah, this is more than you could possibly do," introduced me. We hit it off. He's fine with me because he knows I'm not after his job. He's grateful to have a sounding board for the whole range of stuff that are in his job, but also having stuff that he can just having someone he can just delegate stuff to, who he believes is essentially plug compatible for him. Similar experiences and credibility and the ability to make judgments about how to do things. So it's a real weight off of his shoulders. Another thing that you'll sometimes see is a larger organization, typically private equity backed, for a full-time, so not quite fractional, but the model still works, full-time but interim. Full-time because the company is simply too big to do it on 1 or 2 days a week, but short-term because you're just bridging the gap while the private equity sponsor does a more thorough search for the long-term full-time CFO who's going to carry them the rest of the way to their exit. Just to sort of divide things up. In our experience, a typical fractional exec client is probably maybe fewer than 10 people to, when the 3 guys in the garage become 9 guys in the garage, with a recently launched minimally viable product in the market where the market's giving them permission to scale up. Up to maybe 100, 150 employees. You get to that scale, it usually makes sense to have a full-time strategic CFO on the team for sure. Maybe at 150 to 200, 250, you're getting a full-time strategic chief revenue officer.
Okay.
There's no way that I could do justice to a CFO role in a 500-person business on less than 5 days a week.
Right.
Right. So that different sizes, different solutions for how do you get that strategic perspective into all your C-suite roles.
No, makes perfect sense. So when you think about the actual fractional execs themselves, we talked about your background, which is really impressive. What is the typical profile of a fractional executive? Does that look, would you call your background kind of typical, or is it different?
It really depends.
Okay.
At TechCXO, I'm typical.
Okay.
But there are, as I hope everyone on this call knows, there's more than one fractional CFO or fractional executive firm in the world. Every one of them takes a different approach to what they're doing. In TechCXO's case, we've basically made it an admission standard that all TechCXO partners have been the CFO, CTO, CMO, et cetera, for a minimum of 10 years as a full-time in that role. Ideally for a mix of small, medium, and large businesses, so they know how the principles that work at the big ones get applied at the small ones without all the bureaucracy that could go with it. Now, that's important to us. Now, when you go into that small business, you don't want to be just a bunch of big company guys coming in here to tell you how Amazon and Microsoft do things.
Right.
You want to be able to say, I've been at your scale before. I know what that's like. I've also been at the scale to which you aspire, and I know how to get there. So this background, the background you heard, maybe my background's a little longer than, I could have transitioned to doing this on a fractional basis, sometime before 36 years of doing it on a full-time basis.
Yeah.
But in our opinion, you need that breadth of experience to be effective in this role.
No, I totally agree. So, when I think about from a Valenta perspective, our consulting engagements, one of the areas when we think about change management that we take very seriously is how will the work we're doing be perceived by the individuals we're talking to and engaging with? Because you may have a CEO who loves the idea of what we're coming in to do, and then you may have people on the ground that are less familiar with what we're doing or less enthusiastic, and we have to make sure that we're thinking about them and have a game plan as to how we're going to engage with them to influence. Do you see the same issues going in as a fractional executive, and how do you overcome being seen as an outsider by the folks that are in the company already?
Yeah, yes, it happens all the time in our practice, as in all the fractional executive roles, I'm sure, as your experience with Valenta. In my mind, it is, this is all about the dichotomy that we often hear about the difference between IQ, intelligence quotient, and EQ, emotional quotient. And to be effective as a fractional executive, you have to be both. Yeah. And I'll give another dichotomy that you have to be both. You have to have the confidence of, I've done all of these things. I understand not just the thing I did, but the principles that guided why that was the right thing to do. And the humility to say, to just shut up and listen, and learn from others about their particular situation, and then have the IQ, the intelligence quotient, to start translating and fitting. All right, you talked about these things. My experience says I've seen things similar to that. So maybe there's a metaphor there, and that works with this principle in the following way, and then talk about it, collaborate.
Right.
It sounds like a dichotomy, humility and confidence. In my mind, they're the same thing.
Yep.
If you really know what you're doing and have the confidence of really knowing what you're doing, then you don't have to be the smartest guy in the room.
Yes.
You can shut up and listen, be humble, learn from others. And if you do that, listen, show the respect to what other people are talking about. They'll do the same.
Yeah.
And then it becomes a very collaborative, we learn this from Ted, we teach Ted this. Ted learns this from us, we teach him that. Now, it becomes a collaborative process where you're simply part of the team. And frankly, it's no different than when you join a new company as a full-time CFO, CTO, COO, sure, et cetera. How do I join the team? How do I become part of the team? And it's that same mix of confidence and humility, IQ and EQ. I'm guessing you hire for the same attributes.
Absolutely. And I've always thought I've kind of been on the client side of consulting engagements, and obviously now we're in a lot of our clients and helping them from a consulting perspective. And I've always seen a red flag when, to your point, someone comes in and takes over 90% of the conversation right off the bat. That's not a good sign. So I think what you're saying is absolutely right.
Yep.
So, So in terms of the actual engagements, how long does a typical fractional executive engagement last?
Um, you're getting sick of hearing this, but it
It
depends.
depends.
Um, the most important driver and how long the engagement lasts, I guess, two drivers. One of them is just the market and the client's position in that market kind of determine how quickly can the company scale from, oh my gosh, it's a bicycle, I need my training wheels, to I know how to ride the bike, we're successful, we're at a scale to pay full-time people.
Yeah.
Now, that has happened in months with companies in an explosive industry with a really marvelous disruptive product. And it's taken years. And we have, I have a 5-year client. They've grown very nicely through the 5 years. The nature of what I'm doing with them has evolved enormously. But it's a 5-year relationship. So, and that, which leads you sort of to the second driver. One of them is the client and its potential for growing fast enough to not need you not need a fractional person anymore. The other one is what they ask you to do.
Yeah.
And different assignments take longer than others. And that's actually probably worth a little conversation. The 5-year client that I'm thinking of, my original gig was a promising young controller who had had a CFO mentor who had resigned to go to work for a larger company. And suddenly she was the senior finance person with no mentor. And the partner said, wait a minute, who's going to tell her what to do? So my assignment was a day a week of just being a coach to help her to see if she could grow up to be from a controller to a full scope CFO. And in the space of 18 months, she did. But then it morphed.
Right.
Okay, we're at the place now where we need to go raise institutional capital for the first time in the history of our company. This company had gotten up to 100 employees without institutional capital, so good for them. But they had growth plans that required more money than they were going to develop internally. And they wanted an equity partner with real expertise in their industry. Gee, Ted, have you ever raised capital before? Yeah, a couple dozen times. Would you help us with this? So stayed on to coach not just the new CFO, but the whole leadership team on how do we package ourselves? How do we build an investment thesis that a private equity firm can identify with? We're out and raised a pile of money. And then they said, well, our investment thesis was there's a bunch of companies in adjacent areas that we should be buying and bolting on to our core business. Well, have you ever bought and integrated a company before? Yep, a couple dozen times. So I stuck around for that. And then the CFO that I helped to coach up got recruited away to go for another company.
Okay.
Hired a new CFO. I was on the sidelines for all this, just, congratulations, welcome, but not doing any work, just, staying in touch. And then the controller I helped hire to replace the one who grew up, resigned to go to work for another company. And they reached out and said, gee, do you guys have controllers at TechCXO? I said, yes, we do. We have controllers in there. And then the life got really busy and they know me, they trust me. So now I'm being that sort of deputy CFO, helping this full-time CFO with just the stuff on his pile. So that happens a lot.
Right.
You become an insider, people do trust you. And it happens a lot.
Yep. And I guess that raises an interesting question, because we talk about as a company grows, they're going to grow to a point where they do need that full-time executive. How often, or is it very rare for a company to hire their fractional CFO or fractional executive as a full-time executive?
It happens a lot. And we at TechCXO, we tell our incoming partner candidates, if you're any good at your job, every one of your clients is going to offer you the full-time gig when it makes sense to do that.
Right.
Please do not join TechCXO if you plan to say yes.
Okay.
Now, but it still happens. The number 2 reason why people leave TechCXO is that finally their client makes them an offer they can't refuse, and they go with the client. I've been offered 3 opportunities to become the full-time CFO of clients. I love what I'm doing across a multiple group of them. So in every case, I've helped them hire somebody else to be their full-time CFO. But well, many of you, I'm sure, are familiar with the company MailChimp,
Yeah.
email marketing. They were a TechCXO client for 6 years until last summer when they hired the TechCXO partner to become their full-time CFO.
Interesting. Interesting. Yeah.
So yeah, it happens.
Okay.
And different fractional C-suite companies have different views of that. We are not McKinsey, Deloitte, PwC, who has a party when one of our partners goes to work for a client.
Right.
We go, oh crap, some revenue just walked out the door. But nevertheless, we're very happy for them. We're very happy for the client. And now we've got a gap to fill.
Yeah. No, that's fine. Totally makes sense. So, and I'm going to mention to those that are attending, if you have any questions in our final minutes, feel free to enter them into the chat. Couple more questions as we're talking, Ted. One of them is just around success stories, and you've shared a couple of them already, but
Yep.
Do you have any other success stories that you can think of that might be interesting to the audience?
Yeah. One is not one of my clients, called Cytier Therapeutics. They're a biotech company up in Boston that just completed a $125 million IPO last summer with a TechCXO fractional CFO in there from early on in their development. You've heard about MailChimp. I told you about that's a current client right now, and they're privately held, so I can't say who they are. And I'm going to tell another story that I can't tell you who they are, but the company that uses 3D printing technology. I met the CEO of this business at an investor conference where he was pitching to raise capital. I described what we do, and it was the penny drop for him. He said, I know exactly who I want to be my full-time CFO, but Jim's got a full-time job right now, and I've got this little startup. So you're telling me, Ted, you'll come in here and you'll help me set my company up, get it off the ground, get my funding done. And when I'm at the place where I'm big enough where I can afford to hire Jim, you'll just go away and you won't be mad at me. And I said, yeah. So about 18 months into that, we were in the marketplace, revenue just exploding, reached that scale, called up Jim. Jim came on. I spent a month or so helping Jim sort of, here's how I set it up. We're transitioning to Jim. And then I disappeared. In that particular case, 3 months later, the CEO called me back and said, I don't know what happened, but Jim is not the dude that I remember working with 5 years ago. Can you come back in here, please? And there's still a client, and
Okay.
It'll be our 5-year anniversary will be in May of this year. So that's kind of the range of things that happen.
Yeah. Oh, very interesting. So where have you seen business owners make a mistake? What are some pitfalls to avoid if you're a business owner considering a fractional executive?
Know why you're doing it. In my time with TechCXO, I fortunately only had one of these where the CEO brought me in because her board said, you need a strategic advisor in the finance area, the whole pitch that we've been talking about for the last 45 minutes. But she wasn't bought into it. She was difficult for her to let go of things that she'd been doing herself. It was difficult for her to trust somebody new coming in. She never opened up to collaborate. She took one piece of her most important advice was, you need to hire a full-time accounting manager because you're at the scale where you need that person and you sure don't want to pay me to do that work. and there's enough volume that it needs a full-time person. She took that one piece of advice, and then we parted company. And it's because she didn't have that mental model that we just talked about of
Right.
how this needs to fit. Another important thing is negotiate a fee arrangement that works for your work style. In this particular case, every time she saw me, she saw a dollar sign stenciled onto my forehead of a bill rate. And okay, well, that's not the way to think of a collaboration partner.
Right.
And you can solve that. You can do retainers. You can do my particular deal is I'll say, look, I don't want to keep track of my time in 6-minute increments the way your lawyer does. I want to just agree that I think the scope of this is a day a week. That is X dollars a week. If sometimes the day a week lasts 12 hours, great. It's still the same day a week for the same dollar amount. And if sometimes the day a week is 6 hours, that's okay too.
Yep.
And we'll talk about it.
Right.
And every 2, 3, 4 months, we'll just look at each other and saying, are you getting enough of me? Am I giving away more time than I think is appropriate to give away?
Right.
It's a collaborative conversation. All right. And then a third thing.
Yeah.
Embrace me.
Yeah.
Make me part of the team, just like your full-time CFO is going to be when they are. And that means you get to hold me accountable, just like you hold accountable the other people on your team. You get to give me authority to go talk to other people to get to do the job you've hired me to do. Don't put me on a pedestal over here with, this is the oracle, and we go up into the temple periodically and we get wisdom.
Yeah.
Integrate me into the team. You got to recognize, 1 day a week is not the same as 5 days a week. So there needs to be a pretty thoughtful discussion about how do we de-scope the job to fit within the time that we've agreed we can afford to pay for or need to pay for. But those are the things that I've seen as critical success factors for good engagements.
Ted, it's funny you say this because I'm thinking of 2 clients right now that are on polar opposite ends of how they view this, right? One client, every time I've interacted with them, they introduce they have a fractional executive, and they always introduce this person as, oh, this is our interim executive, or this is our part-time executive or fractional executive. And it's very clear this is a person that's not considered in the same light as the other members of the leadership team. I have another client, every single time, it was probably months before I even knew that one of the executives happened to be a fractional executive, because they were viewed exactly the same. So I think it's what you're describing is absolutely right.
Yeah, that happens all the time.
Yeah. Well, we are just at time. So this is, you have timed your answers perfectly. So thank you for that. And finally, I just want to ask if any business owners are listening to this or watching the webinar and are saying, I really need a fractional executive of some type after talking about this. Is the TechCXO website the best way to reach out?
That, or pull out your pencils or your notepads, ted.stone@TechCXO, as you see spelled on the screen, right? Whoops, there.
Yeah.
.com.
Excellent.
Happy to connect you with a person with the right expertise to help you sort of sort through, what are your issues and do we have the ability to help you?
Terrific. Well, Ted, thank you so much. I know I've learned a lot, and I'm very confident our audience has as well. Really appreciate you taking us through the fractional executive model and the benefits they can provide to a business. And we look forward to hearing from you again in the future. Thank you so much.
Well, thanks very much for having me. Look forward to speaking to anybody who wants to chat about how this might work.
Excellent.
Thanks, Kishore.
Thanks everyone for joining. Have a great day.